Good evening, Ken Long from Tortoise Capital Management. I want to do a quick case study on how to find triple screens using stock charts, and we'll use Snagit and just see how fast we can get this going. So I'm logged into stock charts, hit my favorites, go to my pre-established screens, and I'm going to look at stocks TS. So I'm looking at the S&P 500. I'm going to take a look at Barnes & Nobles. Open that in a new tab. It's open. Come down to Nike, right mouse click, open in a new tab. Come over to Nike, fire up Snagit, take a snapshot, go back to, now we're going to take a look at Barnes & Nobles, click, take a snapshot. We're going to copy all, open Nike, do a side-by-side. Okay. I'm going to draw some quick lines. 1, 2, 3, 4. I'm going to need a square for my frame, and then a couple of these. So I'm going to make that my target. I'm going to make this one my stalking. Make this one my stop. And make this one my entry. I'm going to select all of those. Make another set because we'll use those later. So here's the day that I'm interested now. I'm going to draw my stop here. I'm going to be retesting, it looks like right about here. My mechanical entry is going to be about, looks like about 56. That's pretty close. That looks like the trading range that we're interested in. Could also draw that frame a little tighter. And the reason I say that is because this is that bullish move that we're really buying the retracement of. See that bullish move right there? And what we got is a pullback. Now let's just check and see if we meet all our criteria. Our ADX is greater than 25, plus DI greater than minus DI, so it's a positive, strong trend. It's had a pullback with a close below the 20-day moving average, and it closed in an oversold condition. So that pullback is what has created the buy on dip opportunity, and we think if it's going to come up and test 58, and it could also very easily come up and test, it looks like to be about 60. So we'll split the difference and call that 59. Okay, now in Barnes & Nobles, what we have is ADX greater than 25 plus DI greater than minus DI, so that meets the criteria. Closed below minus 80 on Williams percent R, so that we've met those criteria. Here's the day that we're interested. We draw our stop right about here, under maybe 19.5. Looking to buy on an hourly breakout and certainly above, just above 21. And we call this our retest at about 24.5. Wouldn't surprise us to see a hesitation, however, right in here. And so if we got 22.5 and we saw hesitation and market weakness, well, we'd probably go ahead and take the profit on that one. Oops. we'll draw the larger frame now for what we're considering. This looks like the trade we're making. That almost has some washout characteristics too. This is you can see in the previous example in Nike how we're really buying a retracement of a strong bullish move. This one, we had a strong bullish move, but it almost has the characteristics of a washout and a max pain. Somebody was buying this thing around 28 in the last 10 days and had massive pain, dropped from 28 to 20. So somebody lost, 35% on that one, and that creates the rebound. Now, if you wanted to engineer this one a little closer, you could move that stop up in here to try to get a tighter stop and a better reward to risk ratio. But either one of those stops is manageable. By the same token, over here in Nike land, we could probably get a little closer and make that easier to see the 2-to-1. So that's a quick look at how we could use Snagit and stock charts and the triple screen system to take a look at two reasonable setups for continuation plays in Nike and Barnes & Nobles. They're not sexy technology or biotech. They're just good old American companies trying to make a buck in a recovering economy. People got to have shoes. People going to read. So, thanks for your attention.